$4,800 in materials, bought on a Tuesday. The card was charged, so the bank feed caught it. But the receipt sat in the truck console, never tagged to the job. That job's margin looked clean. The next 10 bids got priced wrong. I spent years running a 150-person retail operation across 7 states, $24 million a year in revenue, and I learned something nobody warned me about. Clean books and useful books are not the same thing. Retail doesn't have this problem because every sale rings up at a single store. Construction does. Every job is its own little business, and when a receipt doesn't make it to the right job, the job report lies to you, quietly. Today, how one untagged receipt can break the next 10 bids you make, and what to do about it. Let's go. Picture the truck console at the end of a workday. Crumpled receipts, a coffee cup, a job ticket. The materials your guys bought today are already on the company card. The bank feed has them. A few days later, the bookkeeper sees the transaction and codes it as material on the company profit and loss. The IRS gets the right number off the tax return. Everything looks fine. Here's what didn't happen. The receipt never reached the job. The kitchen remodel your crew was working on shows materials at $14,000 spent so far, but the real number is $18,800. The job report says 35% margin, but the real margin is just 24%. You finish the job, you look at the report, 35% margin. The next homeowner who calls asking for a kitchen remodel, you bid the same way. Same labor rate, same markup, same timeline, because that's what worked last time. Except it didn't work last time. The job looked like it worked, but it was actually 11 points under what you needed. And now you're about to repeat the mistake on 10 more bids. Here's the part most contractors never get told. Receipts have 2 homes, and most bookkeeping setups only put them in one. Home 1 is your company P&L. Every dollar that comes off your bank account or company card hits the bank feed. Your bookkeeper categorizes it, materials, subs, equipment. The deduction lands on the company level profit and loss. That's what the IRS sees, and that's the right number for your tax return. But home number 2 is the job. The same dollar, same materials, same date, same vendor, that needs to land on the specific job cost report. Without that step, the job has no idea what money was spent on it. Both homes matter. The first one is for your taxes. The second one is for your pricing. Most bookkeepers stop at the first home. The receipt is on the profit and loss. The job? They never asked which job. So your job report shows costs that aren't real. Always understated, sometimes by as much as 20%. And every bid you make from that day forward uses those understated job reports as the benchmark. Same scope, same crew, you'll bid at 20% under. The real loss isn't on the IRS side, it's on the pricing side. Same job, wrong number, and now it's compounded across the next 10 bids. Here's a quick reality check before we get into the fix. Tagging receipts on the job is your responsibility, not your bookkeeper's. The bookkeeper can't know which job you bought materials for unless someone tells them. That someone is you or someone on your crew. The only way a receipt makes it to the right job is if it's tagged at the moment it's collected by the person buying it or that same day. Now I know that's another thing on the list, but here's the payoff, and it doesn't take a year. The job your crew is on right now starts showing real margin within days of the receipt being tagged. The next similar job you bid, could be a week from now, could be a month, gets priced off real history, not bad data, and mid-job, when materials start running over, you see it before the job closes, not after. Your bookkeeper, your CFO, your dashboard, they can only show you what you put in. Now let me show you what the opposite of all this looks like. This is the receipt capture flow inside Best Decision Project Tools. Real receipts, sample company. The crew member finishes a supply run, pulls out their phone, opens the Project Tools app. It runs on any phone browser, no install, taps receipt capture, takes a photo of the receipt, picks the job, Alvarez kitchen remodel, the active one, picks the category, materials, records a 5-second voice memo if there's anything to flag, and then taps submit. 3 taps and 30 seconds in the parking lot. Now on the admin side, the receipt shows up immediately. The AI has already pulled the vendor, the date, the line items, the total. The bookkeeper reviews it, hits push to QuickBooks, the expense lands on the company profit and loss, and the jobs cost report. 2 homes, 1 step. And it works the same way for labor. The Timekeeper app, the same crew member taps clock in, picks the job, and their hours flow to that job's labor cost automatically. Burden wages, not just gross. Same loop capture in the field lands in both places. I'll show you exactly where receipts go in Project Tools and why none of yours leak in a follow-up. I'll link it below. Now, if you're not on Project Tools and you're using QuickBooks Online, the equivalent is QuickBooks Online's Projects. You'll need QuickBooks Online Plus or higher. Essentials doesn't have it. Ask your bookkeeper to turn on Projects, and when they enter an expense, they'll tag it to a project. Same outcome, the expense lands on the company P&L and the project's cost report. The catch is you still have to get the receipt to the bookkeeper with the project name. A photo and a text message work. The phone in your pocket is the cheapest tool you have. 3 things you can do right now without buying any software. First, get a system to your crew today. Every receipt gets a job name written on it in pen before it gets handed in. That alone fixes most of the leak. Second, at the end of every week, sit with your bookkeeper for 15 minutes. Walk every receipt through a job. Anything without a job tag, figure out where it went or write it off as overhead. Don't let any receipt land on your P&L without a home on the job. Third, pull the last 3 closed jobs. Look at the materials column on each one. Add about 15 to 20%, that's probably the real number, and then use that corrected number for your next bid, not the reports number. If you want to see what the gap is costing you right now, the free receipt calculator is in the description. Crew size, average receipts per week, and your honest miss rate, it'll tell you the annual leak in dollars. It takes 2 minutes. Now everything you just saw, the field receipt capture, AI extraction, the dual flow to profit and loss and jobs, all inside Best Decision Project Tools. It's the same place your team clocks in, runs estimates, and manages their job photos. It's built for the owner who's running the work and figuring out the business side as they go. Links in the description. So 2 quick things before we wrap up. The free receipt calculator is in the description. You plug in your crew size, your average receipts per week, your honest missed rate, and it tells you in dollars how much your reports and your reality are off by per year. Most contractors who run it the first time are surprised. Go ahead and subscribe so the next video shows up. And one more thing, tagging your receipts gets you a clean job report, but here's what nobody tells you. The busiest year of your business is when cash flow can blindside you the fastest. We're going there next. Watch this video.